Okay, Samir Shah, MD and CEO NCDEX, is also with us on the phone line to give us his views on the same. And it indeed is fairly a momentous day as SEBI has now approved the options trading in commodity derivatives. Your initial thoughts?
Yeah, no, it's very encouraging. We are very excited with the final approval of options. This has been in the works for a while now, so it's great to see that the final sort of approval from the SEBI board has been received, and we are now going to embark on this, the next stage of reforms for growth and development for commodity derivatives in the form of options. So we are looking forward to, to this new journey.
Mr. Shah, good evening. This is Vijay here. Sir, if you could tell me in terms of, yes, this was an expected thing which is being discussed for at least last 3 to 4 months. How would it have an impact on the commodities market, because this is the first time that options has been allowed. So in that sense, how are things going to pan out? And from exchange perspective, how ready are the exchanges? What the timeline that we are looking at when options as a trade would be traded in commodity exchanges?
So I would say we are about 90% ready in terms of technology, systems and processes, and the reason why that 10% gap exists is because we are awaiting the final risk management guidelines from SEBI. Now that the board has approved, SEBI board has approved, we are hoping that the final guidelines will be issued by SEBI, and after which we will see what gaps are. But we are pretty much ready. I would say we are 90% ready. And I think this development is very crucial because options are a much better risk management instrument for a large section of participants, including for farmers. I think this is going to be huge for farmers. Already in the futures market, NCDEX has seen a fairly promising participation of farmers in the last 12 to 18 months. And we think that with options, this will take it to another level altogether. So this is, truly very positive. We may take a few months to implement any specific SEBI guidelines there might be, but we should be ready very soon.
Right. Samir, just stay on with us. We have a couple of more questions with you. Chirag M. Shah, Senior VP at Philippe Commodities Private Limited, also joins in with his perspective. And Chirag, as I see it, purely for a layman or a viewer just tuning in to get an update on this story, this means more depth, more participation in the commodities market. It's also the regulator's initiative to ensure that all asset classes are developed further to bring about more maturity in each segment.
I think I would agree with to almost the entire extent that what Samir was just alluding to, that it's a great risk management tool for the farmers. And I would actually go a bit further and say that, for any commodities participant, because of the inherent volatility, an options product is something that is really something that was required, because otherwise people who did not want to participate or were staying away from the markets because they did not want the daily headache or the daily bother about mark-to-market, paying of mark-to-market. I think for some people, like those, I think a plain vanilla options trading is something that was sorely needed, and we welcome this development, and let's see how quickly people latch on to it. But given our experience in the equity side, I think people will adopt and adapt to this development pretty fast.
Right. Samir, could you help us with numbers and how this really broadens the base for diversifying risk or mitigating risk, especially in the agri-commodities space?
So, of course, this will take some time. I have a slightly different view in terms of how much time it takes, because I think SEBI is going to take a step-by-step cautious approach. Initially, our understanding is that there will be a one commodity each in the agri and non-agri segments. So initially in the sort of phase 1, there will be 2 commodities that will be identified for options, and then depending on that experience, a more wider rollout will happen as we go forward. So it is going to be a more step-by-step approach rather than all gates open, and I think that is very required, because although options have been very successful in the equity markets, they are new for commodity markets, and although some of the traditional commodity markets have been trading traditional options over the counter for many decades, but a regulated marketplace for options is a new experience, and we will have to tread this path carefully with investor education and awareness programs. So I think that it is going to be it's going to be a progressive step-by-step development of the market. But in terms of numbers, I think it is significant, because if you see the number of farmers and the number of agri-businesses in the country today, there are several thousand dal mills in the country, several several hundred masala manufacturers in the country, many poultry feed millers in the country. All of them who have missed a appropriate risk management product will now have a very suitable risk management product in the form of options, and we see a significant growth of their participation on commodity exchanges.
Chirag, good afternoon. This is Vijay Iyer. If I could get you at this point of time, you have seen Indian commodity markets at various phases. Finally, we all know after the merger, this is the first big reform coming in where options are going to be allowed. From a trading perspective, how do you think things are going to be different for the commodities market once option trading starts? Because we all know how equity markets are established in India, but when it comes to commodities, there are apprehensions. So in that sense, do you think the commodities market as a whole is matured enough? And secondly, how do you see things panning out when this particular options start trading in Indian commodity markets?
I think as far as the maturity of the markets and the participants is concerned, I think people are pretty clued on, and the understanding of the product is not there. The understanding of the product in the traditional parlance also was very, very high, extremely high, and so I don't think there is a problem in terms of understanding. I think the biggest challenge will be how quickly the market develops in terms of what is the vis-a-vis the historical volatility, what is the implied volatility that market starts trading at, because usually that is where the biggest in terms of the challenge would be in the how the market is pricing these options. And if the pricing is fair, I think there would be a significant amount of participation, because I don't think the market lacks the understanding in any which way.
Samir, if I could get you at this point of time, during your discussions with the regulator, what is the kind of framework that perhaps a commonality or consensus has been arrived between the regulator and exchanges like you? Because also the fact that SEBI has always been concerned that they want much more delivery based contracts in the commodities market, and perhaps they are also asking exchanges to push in so that that culture builds over a period of time. What is your take on that, and how do you see it panning out?
Our understanding from discussions with the regulator so far have been that the preference is for a options design which benefits end users. So that's the fundamental principle that the regulator would like to apply. So rather than it being only for financial participants or only for speculators, the end use benefit has been firmly enshrined in SEBI's thought process. And that if you then take that further, then a delivery-based architecture for options seems to be the most suitable, from a benefit to end users is concerned. So although we are awaiting the final guidelines from SEBI, now that the announcement has come, we are hoping that SEBI guidelines will come through very soon, and we will see the details in the guidelines. But the principle will be a strong end-use benefit. That will be the main driving principle of the regulator.
All right, Chirag as well as Samir, thank you so much for joining in and giving us your perspective on what this means, and Vijay as well for not just giving us the story right now, but for giving us the ET Now exclusive earlier in the day. SEBI has approved the options trading in the commodities derivatives and cleared the single license regime for brokers, and that was the breaking story right now. But tell you what, on that note, let's slip into a short break right here on the show. Stay with us. We give you a heads up on some of the key earnings when we're back.